let's even first check to be sure that yes, our structure is working well. So we have our net income, right? So currently our balance sheet, everything is just the same value as compared to previous period. So what I'm going to do now is our first line item is cash. So let's go straight to our balance sheet. Our first line item is cash. And this is what I'm going to do. For my cash, for our cash, which will be our what? Which will be our cash ending balance, which we have here. So let's take a look at it closely. So we are both learning together. It's not as if I've actually built this this software and I'm looking out for it. So let's look at, firstly, let's link our cash to our schedule. So here I have my opening balance of my cash, right? And I think what we need here is just our so we should add our, so the addition will be cash. So cash generated in the period. So we don't need this subtraction because I think cash is just quite straightforward. Okay. And what I'm going to do is I'll just link this straight to my equal to, let me see the cash flow. What do we have in our cash flow? Okay, yes. So what we need to do is we need our cash generated in the period. So where's our cash generated in period? I think we created that. So I need to scroll down a little bit. Okay, yes. So cash generated in the period, cash restricted at the beginning, cash changing cash, classifiers, assets, net cash. Okay, just trying to get the cash generated in the period so that we can link that. That's it. See, it's learning process. I don't think I have it somewhere. we are both doing it together, so it can be dirty and what not or what not. So now let's see our change in cash restricted in period. We just need the cash generated in the period. So let me ask us, which line item represent our cash generated in the period? Let me ask you guys. So we are both doing this together, please. Which line item represents cash generated in the period? So a good way to do that, let me just look historically, just some cash flow from operation plus cash flow from investing and plus cash flow from financing. So one hit 7. No, this seems to be giving us a different thing, right? But I think it's the first one, right? Which is the net increase or decrease in cash. Okay, good. So these are more like the funny kind of things you see. Now, actually, the values are not adding up, but as I said, you are not auditor. It's not your own headache. And I think because they've included restricted cash. If you check the balance sheet and we look at the restricted cash, so which means they've added it up. So that's none of your own headache. So you just have to focus on your own forecast, and we have the value like that. Okay, yeah. So which is this? So which is what we have here. Which is what we have here. Which is what we have here. Okay. All right. So now what I'm going to do is this my net increase or decrease in cash restricted. I'm going to edit the formula. So the index formula now, I'm now going to put if my period here, right, my period counter, if it is equal to 0, comma, it should give us that index formula that we have in it. Okay. If not, what should happen? Now it should come straight into our cash flow and add up our cash flow from operating activity plus our cash flow from investing plus our cash flow from financing activity, and close my bracket and press enter. So what will happen is by the time we have our forecast, that will automatically do what? Just pick that up automatically. Okay. Okay. And I think that should flow, and that will flow in like this. So as I said, this approach can be kind of interesting and sweet at times, but see, it's advanced modeling kind of thing. Okay. So I hope we get that. So come into the formula. Should I? Oh, I think should have done that inside. Should have done that inside the forecast, not historical. Sorry. So let's do it inside the forecast cash flow line item. Yeah, not historical. Think okay. I think we so for the forecast is speaking from these balance sheets. Okay, interesting. So oh man, so it's always good to know your model. I said at times you are working on a lot of different projects and your brain is just working here and there. All right, so I'm just looking for a simple way to put it so that it's kind of easy for us to link. So I think let me look at this. So for our cash flow, the cash flow link, the forecast link is speaking from our balance sheets, right? So which will be the cash flow link. Then we have okay, just trying to find a way for us to put that. Okay, I think we should put it here. Yeah. So equal to, just link that straight to do we have, I just need something to help us do that calculation automatically. Which one can we use? Okay, okay. I think this is what we should do. For the cash flow link equal to, okay, I think let's do it under this financial statements link. So equal to sum, right? Go to my cash flow. Let's see if this will work fine. So net cash from operating plus investing and plus financing activity. Right, so let me copy this across. Okay, but this cash flow link, I think you should put if so. Okay, but we'll check if that will restrict that first. So our cash, the cash generated in the period, which is summation of cash from financing activity, right, from investing and also from financing. So operation, investing, financing, and I can link this to my schedule. So I'll link this to my schedule. I'll link this to my schedule. So there's already a formula here that is just picking the ending balance if it is historically. Then if it is forecast, that just automatically pick. I hope you still remember that. Okay, so the next thing is come to my operating profit, my cash flow. Then I need my consolidated income statements. Let me see, consolidated net income. So consolidated net income. That's speaking from our balance sheet as well. So where will be our consolidated net income? So for our consolidated net income, I think we should be able to find that in our balance, in our retained earnings. We should be able to find that in our retained earnings. So as I said, kind of it's not like quite straightforward, right? And that's why some people be like, you know what, this approach can be very, very challenging. But see, trust me, it's still one of the best approach you can use. Okay. Well, it is what it is, right? So, and I just show you a very good example so that you don't think, oh, it's more like a straightforward thing. No, might not be straightforward. It can be very difficult trying to figure out where what is coming from and where what not is coming from. Okay, so now for our consolidated, this is speaking straight from our balance sheet, right? And here, if I check my for under our retained earnings, because that's where we are going to find your what that's going part of our net income will come into. So where is our retained earnings? Yes, so retained earnings. So I'm going to call this, I will rename this to my net income. Okay, then that line item, I'll just link that straight to my cash flow. So the same name line item. The same line item, I can copy this formatting. So it can be it can be very, very tricky, as I said. I'll see. I'm not telling you it's more like a straightforward thing, but it is what. So what I'm going to do is I'm going to just link this straight to my equal to, just link that straight to my net income. Think which one are we using? Net, that should be net profits. So now immediately I hope this is correct. Okay, no. So link this and I see it. So those kind of error of linking of a thing, just need to find a way to be able to sort that out. So I'm linking my net income straight into my retained earnings. And what will happen is it will automatically flow. It's supposed to flow straight into my cash flow, right? But what is happening? So why is it not flowing in? So I need to check our consolidated net income. That's column E, right? Hope it is that same. Yes, that's column G. Okay, let's check. Column J. So welcome to the business, guys. Being a corporate finance modeler can be very, very interesting at times. Where's the balance sheet? Okay, so okay, so I think that should now flow from there. That should flow into our consolidated income. So why is it not coming in here? Why is our consolidated income not flowing in here? So this is coming from which row? So check. So those are so as I said, it can be very interesting. That's the best way I can put it. So this is coming from which column? Some range. Okay. So column D. Should I be picking from column D? Should I be picking from column D? Let's be sure where these are some is speaking from. Let's be sure this is picking the right line item, right? So this is supposed to be some ifs on B. So as I said, self-review is always very important, and I think that's this part of what this approach kind of gives to you. So this should be picking from column, that should be column P, right? Our sum if should be from column P. Why is it picking from column L? So let me rewrite the formula. I'm not sure that is working. So some ifs, right? Then light everything from here down to the end. Keep the row constant, and the criteria range should be column, I think that should be column L. Yeah, that should be column L for the cash flow link. column L, right? Keep that constant. Yeah, no. So criteria, let me just put this here. So the criteria will P, then the criteria should be okay, let's use this guy, which I'm going to keep the column constants. Okay. So forecasts, okay, yeah, then maybe you just multiply. So multiply by the period here. My period counter is greater than 0. So that we don't need that for the first. So that will just come in the forecasts. So you can see. So what happens is automatically, immediately I create that link. Look at my balance sheet. My balance sheet becomes balanced. Right? If I delete it again, my balance sheet, if I let me do like a conditional formatting so that this might check out kind of show. So texts that contain okay, error. So if it is error, it should just give me a red font. Okay, I'm not sure that's a good. So let me just set the dash. Give me something like a light red font. Okay, yes. Then if it is okay, just doing some conditional formatting by the way. If it is okay, it should just give me a font that is green. No, that is white. This white, right? No border. Click on OK. Okay. So I hope I can still redo that from okay. Just I need to rewrite the formula. Sorry guys. So currently now my model is showing model error, right? Because my balance sheet is not balanced. Right? Why? And because one, I've linked my consolidated income statement to my what? To my retained. So if I come to my balance sheet, I will realize that one is my retained earnings has changed. Right? And that's one good thing about this approach. So it's kind of help you. So as you are doing the calculation, you are linking something. It kind of quickly tell you that, hey, this is where the problem is coming from, the current line item. So if I come to my balance sheet, I can see now that this guy and this guy, currently they are not the same thing because there's an increase and it's throwing up that balance. And what's the difference? Because of the net income that I've linked to that, right? So, and I need to also link that to my cash flow. So, equal to sum ifs, right? So, from my calculations, let me try and zoom this guy down. See, trust me, if you can flow with this approach and you know it very well, trust me, you are. I don't know that's kind of model that they will bring to you that you'll not be able to build and balance up the model because one is this allow you to because you need a full understanding of financial statement link that if this is coming here, if that is coming here, what is linking, what is coming from. I'll give you a very good example while I'm putting my formula here. A friend of mine was building a model and he has to present to the management, right? In fact, he has spent hours on it, almost 4 hours, for almost a day. Say, Victor, I finished building this model since yesterday, and this model is not balanced, and I can't present this to management. I was like, okay, though I'm very busy, but you know what? Just send it. Let me see what will happen. And by the time he sent the model to me, I think the model did not even take me up to 5 minutes before I identify where the problem was coming from. So these are more like what this we really help you to do. Okay, so I've done this, then I'll multiply this by at least the period must be my period up here must be greater than 0. So once I do this and I link it, Okay, so I forgot to log this guy. So because like so many things that you need to understand from here. So immediately I link that, look at what happened. My balance sheet is what becomes balanced automatically. And I look into my cash flow and I can see my consolidated net income is coming in, right? My balance sheet, my retained earnings has increased. My retained earnings has increased like that, and my income statement is fine, right? Now let me ask you, do you have any question? Is it looking like a magic? And as I see, my own way of my own way of teaching, right? It's not as if I'm not scripted. It's not as if I have maybe I've built it somewhere and I'm trying to look at it. We are both checking it together. So any question before we go to the next thing. Right. So this is just to check and be sure that yes, our model is working perfectly well. Any question? Any question? Any clarification?
Sorry, Victor.
Okay, yes.
Please, can you take that forecast CF? I've linked it to the consolidated income, but I don't seem to be getting the figure you are getting. I think I have an issue with my linking, so probably it's just the formula that is my issue.
You mean the retail earning or which one? Or the cash
Yes,
flow?
for the cash flow on the cash flow bit. So to that forecast CF.
Okay. Yeah. So I think I said you need to rewrite the formula. So I think the formula that we had before was wrong. Yeah. So the
Oh,
formula is wrong. Yeah. So you need to rewrite the formula, which is what I had to do again. So let me just write the formula again. So equal to sum ifs, right? Sum ifs. I'll go to my balance sheet and I'm summing at least starting from cell P58 down to where we had that page stop, right? A cell before it, and I'm going to keep the row constants, comma, then our criteria range. So where we create, so under this CF link, right? From that same row, so they must maintain the same range. Starting from row 58 here, it must also start from row 50. That's row 58 there. So to the last end. Sorry guys, and that's one good thing about self-review. Then equal to must always be just give the name of the cash flow that we've created here. Close bracket and press enter. Then I'm saying we multiply it by as long as the period, right? Period counter, which I'm going to keep the row constant because I'm going to copy it. If it's greater than 0, because we only need it for the forecast period. So that's one good thing about self-review. So I need to just replicate this and paste it across the formula that I had before for the line item. Part of what we are doing as well is more of what we call at least assume maybe that was part of what kind of really helped me in understanding this approach because if you build like a data analysis or more like data analytics, you're a good data analyst and you started your data analytic uh, journey with Excel, right? These are more of data analytic kind of thing, kind of approach when you're creating more like a solution for a client in Excel. Let me replicate that formula across. Can be very challenging at first. So if you're finding it hard to digest it, just take a pause, come back to it, review, take it a step at a time. Okay. So by default, you see that automatically that will balance, at least so that we are sure that yes. But okay, yeah. So another thing, now our cash ending balance. So this guy, So why is this guy not coming here? Expect this to come in. Net cash. Okay.
Hello, Victor. Please, I have a question. Can I ask?
Okay, yeah, please go ahead.
Yes. So back when we were calculating the cash generated throughout the year, you mentioned that sometimes the value they have there would differ from the addition you have. If you
Mm-hmm.
meet instances like that in the future with a different line item as well, is there a way to state it or acknowledge it so that whoever is looking at your model knows that there's a discrepancy, or usually we just gloss over it?
Oh, okay, a very good. That's a very good point, right? Which I think what we've done here, right? So, for example, this is our cash now, right? This is our cash schedule. So we link this cash generated in the period, and if you sum this opening balance plus plus that change is actually not adding up to the ending balance, right? So case like this, maybe because of review, you can decide to put that comment there that the historical has actually been picked directly from the so just put the note and comments. Or the other thing you can do is maybe you just want to put like a balance formula here, so that just help you to put equal to maybe this guy minus the summation of this up here, right? So that just kind of, you can now maybe you can now add like a note or something as to balancing, but definitely in the forecast you might not expect them to be zero in the forecast like this, right? Then maybe you just put balancing so maybe you just put like historical balancing difference, right? Because your headache is not the historical, it's fine, it's audited, and you can just move on, or better still put a notebook to anyone looking at it. And we always expect that people that look at a typical corporate model must also have bit understanding of it, but most time it tends to be the other way other way around. So in that case, you can just create that line item, or just put like a note that historical does not these changes, and just put all your notes and move on. But don't try to spend much time on finding why it's different. As I said, there might be restricted cash that they've included, but I don't seem to see restricted cash in the asset, but they might have added it together. So there are so many reasons why that difference might be coming in. All right.
Thank you.
Okay, yeah. Welcome. So now this our guy here is not adding. Okay, so I think I know why this guide is not adding up. It's not coming in into our cash schedule like this. Right? I think I'll do it. That sum of column. We can even just, so that we don't waste our time, and just move on with this guy. But yeah, let's see. So we can decide to rewrite. But the reason why why this approach is always good is it's kind of allow left to right consistency across. So someone can pick up this model and just highlight everything from year one and just copy it across. And even if they want to extend the formula, it's easy to extend from the right to the left. Okay, so for the balance sheet, I think we also need this guy. I think that's why it's not coming up. So this from our restricted, from that net increase in cash, I think that should now flow in. Okay, yeah, so that comes in here. Then up here, we expect our cash. Okay, perfect. So which we can see here now. Okay, so which comes in here. Then the other thing we now need to do. So if we go to the balance sheets, so by the time we are done, we build more like there's always like a mega check to be sure that those line items are matching. For example, now the current cash ending balance here is not matching with the current ending cash balance, right? But the balance sheet is balanced, just because we created a separate schedule for that cash. So you also need to do the same thing. So here, I'm just going to put like an if formula here or on this so that I can just move on. So if my period, right, if it is my period up here, period counter, if it's greater than 0, if it is equal to 0, right, you should keep the formula that we have there. If not, you should just give us the previous period ending balance, close the bracket, and I can drag this. So as you are working, which is a very good example, so I can create something like a check. So I'm just doing an example for you so that you know, at least to help you keep track of line items that are linked. So I can call this check and say cash flow balance in CF. So say cash in CF. I'm just doing an example of kind of check that we use. Match with balance sheet cash, right? And just put equal to, go to my cash, my balance sheet, which is my ending cash minus my ending cash in here. So and you do this. Hope I'm doing the correct. I'm comparing the correct thing. So 9465, which is different, but 28, 20. So there's more like a difference which we need to check what's causing that difference. So things like this just help you to keep track of what is happening. And you can see where that is coming from, right? Because the ending balance here, right, does not match. There's a difference coming from historically. So which means the cash linked to the balance sheet. So can even bring that up here so that we see it. So link this to the ending cash balance. And easy to see what is actually going on here. So you can see that there's more like a difference between what has been linked to the balance sheet and the cash. So this is the cash flow ending balance, and this is what was linked to the balance sheet. This is like a funny thing, right? What do we need to do and stuff like that. And they said it's none of your headache, but just make sure you keep at least it's good to just have that check and be sure. I think hopefully I hope that difference is not, let me see. I don't think it is this exchange rate on cash and restricted. Right. So most times always good. And that's why I said always good. We kind of put in more like a formula. I think we didn't do that for our cash flow. You see us, but we did that for balance sheets. Did we? Okay, I think here we put the formula for balance sheets. We put the formula for our income statements, but we didn't do it for our cash flow. So you see now that we are going against our own rule. But as I said, because these are more like a proper audit trail, right? Because if you look at it historically too, so that we are sure it's not our own mistake. The link historical to, so you can even see, so historically there's like a 68, so you can see that difference. That difference is what is flowing in straight. So we need to, so because of that, so you can see now, so this kind of check, you definitely need to find a way to make sure that your model, this just automatically find a way to write off and make sure the difference here is just 0. Because for your home model, you definitely, there's no way you say the closing ending cash, right, is not the same thing with what you have in the cash flow. I hope you're understanding the whole logic now, right? So these are more like typical things that you see when you build, when you are dealing with auditors, figures, and things like that. So currently now it's saying our balance sheet is balanced, but right, this kind of check, we call it more like reconciliation check, just help us to keep high on what is and what is not. So we put that on pending. So put that on pending. So maybe we put like a yellow here, and we'll just type check. So those are more like things you do maybe by the time we are done with the model. So you know that one, we need to do that check and see what is happening. Why are we having that difference? And if maybe we need to do the one adjustment for that line item to make sure that our forecasts align with what they have. But difference is definitely coming from historical. So those are more like the proper check we even do before we start a model build. I think we missed that part, but it's always good to check. Let me rename this guy too. Let me rename this guy. Let me rename it to check. So we call this guy check. So to be sure that line item kind of match. For example, another one is net profits. So net profit in P and L match with retain earnings. Doesn't match with what we have in retain earnings. So that one you do equal to, you come here, my net profits, right, minus, go to my balance sheet workings. So as a corporate finance model build is really a lot of work to do, right? And as I said, that's why it's also one of the most respected skill in the corporate world. Okay, oh, sorry, I'm using the wrong line item. So equal to my net profits here, my net profits minus the net profit that I have in my retained earnings. So somehow you expect those ones to be the same thing. So you know that yes, this one you are good. So these are more like different check that you can incorporate into your model. So now the next one, let's go straight into our balance sheets. Let's go straight into our receivables. So receivables, let's do our receivables, which is the next line item. Sorry guys, it's not always fun. Right, but see, it's one of the skill you can have. It's a global skill, corporate model build, right? So here, our addition will be our what? Our revenue recognized. And see, I won't lie to you, right? I used to be in a training space before. There is, I don't know that training that you will go to or you will go for, that you will be taught this in this manner. If you've seen anyone, please let me know. Please let me know. Please let me know. It's not about feeling, but it's just for you to value what you are getting, right? So what we are deducting will be our cash received. Then we have our ending balance. Now, firstly, I will link my cash in here. So I will link my cash. So I will link my cash, and I only need, in fact, which is and I think which will be a very good thing. So just okay, because for left to right, so equal to, I'll just link that straight to my revenue here. Link this straight to my revenue. Okay, so link this straight into my revenue. Now straight my balance sheet will throw error. So let me delete that again. So once I link my revenue, so now before I link my revenue, everything is showing okay. Okay, I think did I copy this? Because I apply conditional formatting here. So let me copy that across. Let me copy it across. Can be very stressful, can be very annoying, but see, it is what it is. Right? Corporate finance model, project finance, both of them are just interesting. Okay, so where are we? Okay, yeah, so we are trying to build our receivables, which is the next line item. So the revenue recognized. So let me just link that straight to my revenue from my income statement. So equal to, go straight to my income statement, link this straight here. And what happened is my model will throw error. Do we know why it is showing error? Anyone? Do we know why it's showing error? Do you know why it's showing error? Anyone?
So I think it's showing error because of So yes, obviously your balance sheet is not balanced, and I'm not sure this has flown into your cash flow. You know, receivables is, I think there's this movement, but I'm not sure it has been factored in. So it will affect your cash and cash equivalent.
Exactly. So which means we need, so because there's now an increase, there's a changes in our ending balance of our receivables, which means something has increased. So come to my cash flow, and just type equal to, let's calculate the changes which will flow straight into our cash flow statements, and that will be equal to, so for cash, changes in assets receivables will be previous period minus current period. Press enter. Now we only need this if this period, our period counter, if it is what? If it is greater than 0. So if not, you should just make it 0. So it should only calculate when it is in the forecast period. Right? So now that I've done that, the next thing is I'll need to link this to my cash, the line item that flows straight into my what? Cash flow statement. So if I come to my cash, where is our changes in what? So that would be receivables net. Yes. So I can decide to just pick it from the line item directly or any way, but I think this will be proper. And what happens is automatically my balance sheet will balance. So this approach just kind of help you. Yes, we've created the structure, but knowing what to link, where to link, and you can see it here coming here automatically. Now that value, you can see that value is crazily crazy, right? So let's now do, so we are here to calculate our actual ending receivables box. This is not the correct thing that we need. So next thing is we need to go back into our inputs, and here let's now start with our balance sheet assumptions. So income statement, but here I'm going straight with my what? This will become balance sheet. This will become balance sheet line item. And for our receivables, let's check our historical receivable. I think we should use this, right? Coming out did this. So what I can do is, okay, now I even said I want to call our attention into something, right, which I feel we might want to also adjust or update our formula. Now look at this. Now this guy is revenue, right? Let's look at this guy is revenue. If I come to our control worksheets, right, and I decide to change, let's say someone wants to update our worksheets, right? Maybe they say, oh, you know what, no, don't call it this name, and maybe they want to change this revenue into sales. Right now, let's look at what happened. If I come back to my input, look at what will happen. See that this guy name has not changed. And the reason why it has not changed is because it is a drop-down list. So it will not, yes, the name will change. You can see that the name has changed automatically, but the line item will not change. So now, because I think I was working on one model for a client this week, then I tried to just change. Oh, they said, oh, please help us change this name of this line item to this across, and I did that, and I realized my model just threw up error everywhere until I was able to now recognize that, oh, so it's because of this. So what happened is the data validation list will not automatically change it. You will need to come back here and selecting it again, which is a whole lot of work. So I think a very good way is to just automatically be linking it straight to the data name, so that even if they decide to change the name, it will automatically update, right? I used to think that data validation ought to change by itself, but as fact, I think I spent almost 30 minutes trying to figure out. And you know, when you are now doing it for a very big model, that's when you will know you know the impact of it. Right. So, and that's why some school of thought are like, no, don't just do the linking, don't do all these things. But even if you know, if you be doing the direct linking, please just know this approach is kind of good. It's a good learning curve, I think that should be tax, right? We're very good at any call for even as a data analyst and all. Okay, so this is always good like this, so that by the time they change the name and there's no need for, I think we also use the same thing. So in this our formula now, you can see now that even this guy has not changed, right? And in the drop down option, it's still the same thing, so it has not changed. So which is actually not a good thing. So it's always good we just reference it straight to the base data, right? And so that it's changed here, then definitely it will change every other part. So please just try and change your own. At times, if you're not faced with something, you might not might really not understand what is going on. Because you cannot imagine I packed. I spent almost 30 minutes trying to see what's happening. Everything is working perfectly and the whole thing. It is good. It just changed the so that by the time you change anything in the name range, it should automatically change it. So now you can see now that which was what even happened to me. So now imagine I've linked that name, but this because of this guy is still a drop down, right? The name is still I'll still need to come back here and select it, change the name again. Imagine, and everywhere I've used it, I'll need to do that. So instead of using this, we can just reference this back to the line item name. Yeah, so that will work, and we can just find a way to delete this guy. I just need to relink that. We have used the formula. So you're also learning data analytics, by the way. So it's a plus. Yeah, so it's always good like this, and that just helps you to keep things properly, right? Because you can, I'm sure, at least it was easy for me to quickly figure out what was happening. But imagine um, someone who does not know, right? Just spend time trying to figure out why is this, why is that, why is it not balancing? Right, and like but Victor said, this approach is to even remove that kind of thing. So let's go to the balance sheet, right? And here, just equal to, let me do our receivables. Let's do our receivables. I think we should use this, right? And historically, that will be, let me see, do we have days in a period? Do we have days in a period calculated in our model? Do we have days? Okay, so maybe we need to add the days in the period because we need the okay, maybe we can put it below here. So call this days in a period. And to get our days in a period, that will be equal to oh okay, so I think that's how we do it in our control worksheet here. Let's do it in our control worksheet. I'll call this my days in a period. This. So don't worry, I'll share the recording with us as well. Right, as I said, that's more like the way I really like to teach, so that you can see that there's no magic. It's not as if I have it stored somewhere or something like that. All right, so then I can come to my input. So we need our days. So I can always link this straight to our days in the period from the control worksheets, and I can keep the row constant so that when I copy it down, still all looking at it. In fact, maybe let's put these days up here so that to not be confusing. So receivable days. So let me link this. This should be here. So receivable days. So this should be here. Then call this our receivable receivable days. To receivable days, and let me do the calculation for historical. So receivable days will be equal to both my historical, and that will now be my receivables in that current period divided by my revenue, right? Enter, then I will now multiply that by what? By the days in the period. So which means this is more like the days, the receivable days, right? So you don't always expect and this kind of uh, long receivable days for most for companies um, in advanced country because they deal more with cash and pay and all those kind of things. So cannot expect to be seeing a long receivable day. So I'll just peg this as 5 days. I'll peg this as 5 days, right? Now I'll come to my balance sheet under my calculation of my receivables. So I can now you are allowed to you can always just put in some insert a row there, and I'll call this my receivables. Receivables input call up, so which will be in days. I'll just link this straight to my input here that I've created, and I can calculate my receivables. So I'll call this receivables ending balance, right? So receivables ending balance, receivable ending balance, and I'm sure you know how to calculate receivable day, but first equal to if this is my period, right, that I have up here. Can keep the row so that in case I want to use the formula, if it is equal to 0, it should just give us 0. If not, it should be my receivable days, right, then divided by days in a period. So we need that day in a period. Let me see if I can call that up here. So days in a period. It's always good to kind of do things like this, but let it come below here. Let's come below our receivable days. So days in a period, I can just link that straight to my control, and just for easy audit purposes, I get nothing much. I think we do create a link sales style. Yeah, well, that's by the way. So these are the days in the period, and here I can now put my formula equal to my receivable days. So equal to my receivable days divided by my days in the period, multiplied by what? Multiplied by my revenue. Enter. But I said, okay, let's use, so if this is my period, if it's equal to 0, it should just make it 0. If not, you should do my receivable days divided by my days in the period, then multiply by my revenue recognized. You can copy this across. So which means this is our expected receivables ending balance. Okay, so what I will need to do is to come here and type okay, so I'll just come here and type equal to, right, my ending balance. So let's check here. So we've calculated the expected receivables ending balance for the forecast period, which is what we've used that formula to do. And here the cash received will now be equal to that ending balance that we've calculated, right? Trying to see how we've okay. So let me see what we can do. All right, so I just want to see. So okay, so this one. So instead of making it 0, so I want to put it in such a way that the formula is consistent. So if this is so, remember we said if the period is equal to 0 here, it should give us 0. So instead of that 0, it should just give us the historical ending balance. So which is what we have. So historical value, right? And I can copy that across. Then here will just be the ending balance. So the equal to that ending balance minus the summation of both cash recognized and beginning balance. I can draw that across the period. right? And by default, our balance sheets will automatically balance. Now it's really I'm sure it's really getting interesting, and you guys are like, oh my god. Right? So maybe I should call this advanced corporate finance. So this is just we're only doing the artistical part of it. Yes, the mechanical part of it is when we have the structure, is when we will now come back and start looking at, is this reasonable? Does this match with the historical trend and the whole kind of thing? So if I come to my balance sheet up here, you can see that my receivables, right, has changed from that value. And I think it's quite growing well in line with historical. If I come to my cash flow, you see now that my cash flow, this is my changes in my in my receivables, which is kind of a bit reasonable as compared to what they had historically. Okay? I know it's getting interesting. All right, so as I said, self-learning, 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 self-learning. So now, against the next session, so maybe, okay, yeah. So maybe we might also need to change this, our formula here, so that it's picking this line item directly and not this drop down option, because of that, to avoid that error, that kind of error. So let me also just let me update the balance sheet formula. You can see one good thing about this is it just allows you to focus on the calculation and check of your balance sheet balancing, right? So you don't need to be worrying yourself. I can now, let me delete, so I can delete this and link to Unix. So this just allow you to focus on the line item calculations, do the calculations, and everything just automatically flowing. Now, for your own task against next session, please to try to complete this. Let me put this in red so that some people, people will be like, but you didn't tell us, instructions were not clear. So please complete receivables, complete inventory, and complete. So let me put it as task. Maybe by the time you're checking the recording, you can also see it very well, clearly. So complete trade receivables, complete inventories, and complete your prepaid expenses. Using the same, so I'm sure this one is quite straightforward. Maybe just 30 minutes tomorrow, or just try to create time for it, and you'll be good. And I think we need to also update this cash flow formula as well, and just use that. But please see the way we've created, the way we've completed our receivables. So just go ahead, replicate the same thing for your inventories, then replicate it from your prepaid expenses. Now, the approach you'll be using for the input is use the last period days for your assumptions. Now, don't copy and paste it. So you can see this one is 5. I'm sure if I put, okay, so you can see that this is actually 4.996 and not 5. So don't copy and paste it. Just add code the last rounding value 5. If the last one is 4.2, just type the 4.2. So use the last ending date. Now, I said we are getting to the strict stage. Attention to details, and make sure you do it as expected. The last days of the actual, do not copy and paste it. If it is giving you something like 4.2, just type the 4.2. Right? For example, this is 4.8. Assuming this is giving me the 4.8. Typically, this is actually 4.7, but because I'm writing it to 2 and to one decimal figure, I'll just type my 4.8 here. Please, let's keep to that. So go ahead, complete using the same way we've done this calculation, right? So we've done this calculation. So here, things that we don't need. So, okay, so this one has nothing to do in P and L, so I can remove the P and L. So you can see every other thing linked to where it's supposed to link to, right? Then complete your receivables, please. Receivables, inventory, prepaid expenses, and others. Then next session we start from. property plant and equipment. So let's call it a session here today. If you have any question, clarification, I'll just leave out maybe for like 2 or 3 minutes and I'll be able to address that. So thank you, everyone. We share the recording with us once it is available. Right? So thank you, everyone. Let's make sure we enjoy the rest of the weekend. I'm sure you'll be like, God, this is interesting, right? But it is what it is. Yeah, in advanced class, it can always be like that. So if you have any questions that you can ask before we end the session. Once again, thanks to everyone.